Candlestick charts have multiple benefits. You can analyze the general market to see what it's doing. As we can see in the Dow, still trading above the T-line in a steady uptrend. This doesn't necessarily act as the total benefit of analyzing that you're in an uptrend. It also allows the candlestick investors to analyze which charts are going to work extremely well while the market isn't showing any change of direction. Analyzing the market trend itself is just number one, showing that there isn't a big downdraft in the market or that the market's not heading down. As long as the market is in a steady, slow trend, whether it's sideways or up or even sideways slow, each individual candlestick chart is going to give you indications of which ones are going to create the most powerful price moves. Take, for example, Lexmark. Doing the bobble. The bobble is a very simple pattern. First trend comes up and hits the resistance level here at the 200-day moving average. It sells off. Comes all the way back to the 50-day moving average. Then it does a doji hammer followed by bullish engulfing, stochastic starting to curl up. Where's the next target? Most likely coming back up to test the T-line. I'm sorry, not the T-line. The 200-day moving average. But what is it going to do once it gets to the 200-day moving average? Well, we can see that it was pushing that way because we had a little left-right combo, which is one of the major candlestick signals, a doji followed by a bullish engulfing signal. And that's what's most important was it did another doji right smack dab on the resistance level, what we call the bobble resistance level. And we have a simple rule of a doji. The price is usually going to move in the direction of how they open after a doji. When it opened positive, we can make another assumption, the doji sandwich, which is this candle right here and this candle right here are usually going to be about the same magnitude with the doji in between, thus the doji sandwich. However, there are results expected coming from a doji sandwich. More upside. So we can already see with very clear visual analysis that we've got a strong signal, a doji sandwich telling us there's going to be more upside, a breakout through the 200-day moving average, which was the bobble resistance. We call it a bobble. When it hits the resistance, it bobbles and then comes back up through again. And we know what happens on a bobble resistance breakout. There's going to be more upside. We know what happens after a doji sandwich. There's going to be more upside. So this makes for a high probability trade, and if it breaks out as it's doing, we know what the magnitude of this move is. Usually the same magnitude as this move right here. So this, just putting all the little pieces together, knowing what a pattern, like a bobble, J-hook pattern, doji sandwich, left-right combo, a bounce off the 50, stochastic still heading up, puts us in situations where not only are we in an uptrend, but we're probably going to be in a very strong uptrend as long as the market just stays in a lethargic, slow move to the upside. That same analysis can be seen in our recommendation on going long this afternoon on Fitbit, because today they had an announcement, and a lot of people ask, well, what do announcements do for a chart pattern? Can't they affect it? And the answer is yes, because what we're looking at is, on a candlestick chart, we're looking at the accumulative knowledge of everybody buying and selling during a particular time frame. When the announcement comes out and they gap it up and move the opposite direction of what the trend was, forming a kicker signal, that's a very strong indication that whatever that announcement did is changing the perspective of what that trend should be doing. Secondly, notice what happened again. A bobble pattern that broke out through the resistance level, and it did it with the strongest of the candlestick signals, a kicker signal, making wave 1, wave 3 a high probability they're going to come back up into the $17 or $18 area. Again, this is not rocket science. This is just taking the information that the Japanese rice traders have shown us work time after time through the last 4 centuries that human nature works the same way. Again, going into the future. That'll be it. We'll see you in the chat rooms.